What up with the wheelhouse, everybody? Hope everybody's doing well. My name is Chris. This is Wheelhouse Trading, and welcome to the wheelhouse. So, I wanted to show you my new pool table. I just had it installed. It's hand carved. It matches the whole room. And I just got a chance to play a couple games on it with my girl. Pretty stoked. And yeah, man, pretty cool. So listen, we're going to talk about the markets, everything going on. But before we do, just wanted to remind you, hit the subscribe, hit the like, select all, make a comment. And if you guys are looking for some free Bitcoin, I have the Coinbase link in there, like 10 bucks in free Bitcoin. If you're looking for some free stocks right now, my link is hot on Webull. It's up to 10 shares of Apple. It's pretty sick. And I think it's $9,600, up to $9,600 right now. I am going to be bringing on another sponsor where you can get some free stocks. I want to try out their platform and see what I think about it for trading purposes. And just, I want to just get a feel for the vibe of it. I was emailed by a company and I'm going to check it out. Unfortunately, it was in the junk mail and I didn't realize. So I'll have to get back to them and see if they're still interested. But I want to go over the markets, just kind of walk you through what kind of happened today. And, it is rallying in the after hours, which is really nice. In fact, this is Bitcoin on the minute. And you can see this thing has just been dumping. I mean, it came all the way down here to 39,280, which is just no bueno. We're not putting up with it. We can't. Like, that's not cool. Like, we do not want to be like moving backwards that many steps. Now, this rally is really, really nice. We broke past this 39,676, which was the neckline. I'll just remind you how important this particular line is. This is the neckline right here, this line. Okay, touched again right there. Okay, and look, double touch. Now, a double touch usually is an established area. Both bodies closed above, which is good. So that means there's a fight. But the fight is at the line. I mean, it's at the 1 yard line, guys. We can't mess around. Now, what I showed you on this minute chart with this bullish momentum coming out the box, on the 1 hour, we've produced a couple candles. Good. Still very far away from the 200. A lot of work to do. Everything is starting to look pretty good, though, on the hourly. So we're getting some bullish momentum, and the crypto, all my crypto ones are up. I mean, not as much as they were when it was 47,000 on Bitcoin, but they're coming back. And yeah, so the market has been a little crazy. It's been it's got that old kryptonite thrown at it. That old uncertainty ball of kryptonite, and how much are they going to raise the rates? What's the inflation data going to be? Well, whatever the inflation data is, it's double. Okay, remember I told you that on shadow government statistics. So now it's 8.5, so that's what, 17%. The more that they print, they keep printing, more and more money. I think it's 6, 7, 8 trillion is what they aim to do for various packages, including domestic and foreign packages. Essentially, that would be double if we printed 8 trillion previously for the pandemic, and we're here at 8.5, and then we go to print another 8 trillion during an inflationary environment with momentum being pushed up on inflation. It can get worse, So we'll just have to see what happens. I mean, we can't control that. All we can do is navigate and make good decisions, and do the best we can. And like I had said in that last video, it's good to look at the indexes. I consider a Dow. I consider Bitcoin an index. I consider it the Dow of crypto. Obviously, that when Bitcoin moves, all other cryptos move for the most part, and that's kind of like stocks that are in the S&P or in the Nasdaq or in the Dow. So yeah, I keep an eye on that, and I like to keep an eye on the macros, the indexes. And I told you in the last video that the Dow was making this channel. It was creating this this little channel down, and it was essentially oops, let me grab it. It was essentially doing something like this, okay, where it's like bouncing. Okay, and like we get to put a new one in here, which is directional to the downside. So it's creating this like bull flag, and it happens to be resting right on a minor trend reversal. Okay, so yes, I said last video, moment of truth, because we were right at the 200 at the minor trend reversal. We're still there. We didn't come down far enough to fall through it. We got the body close above it. Now, it looks to me like if it bounces off this, it's going to be huge. And the first step is to get past here. Second is here. Third is here. And then this is the real one for the mid. So this is a minor. This is a middle. This is a mega, okay, for trend reversals. We get past this one, we basically are breaking out of a major base back into a bull run, okay? I'm not saying that that's going to happen. I'm just saying that if that did happen, that's where it would begin. There's a lot going on. I'm actually, I don't want to say impressed, but I'm surprised that the market is actually holding up this well with pandemic, lack of stimulus, high inflation, hawkish Fed, supply chain shortages, food crisis, multiple geopolitical situations going on, and you know, and of course this thing in New York today in Brooklyn on the subway, and that is, you know, I feel for all those people, and I know you guys probably don't know a lot about me, but I really you know, respect like our military and our first responders, and when I see stuff like that, I just get really bummed out. It just blows my mind, you know, that people would just do that to their fellow citizens. You know, I can understand a little revenge and vendetta if somebody does something to you. Don't get me wrong, we might get touched up in the corner over here, but doing that to, like, you know, women, children, random people in a public space like the New York subway system and it's just wrong, man. It is just wrong. I mean, I don't know what's going on with this world. I just had this guy over here, these two guys, they're I guess they're like superstar pool table installers. They're being flown to Australia next week to put in two $35,000 pool tables, and then they're flying back and doing one in Alabama, and they're all over the place. Like, the guy's been doing it for 30 years. I guess he's like some superstar installer. Unless he was BSing me, I don't know. He did a good job for me. But he was telling me he was driving in LA last week on the 710, and in one day there was 3 different shootings up there on the freeway, like shooting out of a car. Not the same person either. So I mean, you know, the world's getting a little wily. You know, it's getting a little crazy out there. You know, people get frustrated, they lose their jobs, everything's high, gas pump. You know, inflation, you know, everything's, you know, frustrating. You know, that causes domestic issues where there's tension and arguing with, you know, your wife, your husband, and, you know, like, there's just, you know, it's expensive with kids. You know, it all piles up on us, and it's tax time, and, you know, and then it doesn't help if you're in the markets and, you know, everything's going down for 5 sessions in a row. It sucks, you know. It's not coming down like this though, okay? Not coming down like this. It's zigzagging in a channel at the 200 on a minor trend reversal and up big in the after hours. So this looks like we could be bouncing, and that would be gravy like SpaghettiOs. You know what I'm saying? So yeah, my indicators are, you know, a little better than the other day, but still not great by any means. Let's take a peek at the SPY. Yeah, we're drifting below its minor trend reversal. Ugh. Yeah, that's not good. But the body closed right above the 200 and the minor trend reversal. Okay, I'm back. I had to sneeze. It came out of nowhere. Sorry about that. So yeah, the body closed above the 200 and the minor trend, even though the wick went below. So it's still holding in there, but it's at the 1 yard line. Russell, I mean, this was the stimulus rally, boom. This was the range-bound distribution. This was the fallout, and now we're hitting resistance on the bottom of last year's range and creating a new range. So, I mean, I don't know what to tell you about the Russell quite yet. It's holding in there. It's not just falling out of control, but it's not getting past the bottom of last year's range. So, let's take a look at the VIX real quick for you. Trending up, back up above the 200. Now this looks bullish. This looks like it's going to keep going, and that is not good. When all my indicators look like that, and you're getting momentum candles above the 200, that kind of momentum, and everything is rallying like this down here on the VIX, I don't like that. But then again, it looks good in the after hours. But then again, how can you trust this market? I mean, yesterday morning, we all woke up to a green pre-market, and the inflation data came out, and the market rallied. I mean, it rallied, right? It was like up, 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 up. And, I came up quite a bit. I was in the green. I was pretty stoked. I actually I was like, oh, this must be a pivot. Let me just buy a few more shares on some of these that are down. And an hour or two later, this thing happened in Brooklyn, and with the shooting, and it just deflated all day again, and I ended up a little bit down. I was way up, and I lost that, and then ended up a little bit down. And it's just like, dude, like, what the hell, man? Like, maybe it's just, with all these things going on, for me, what it is I just know the answer. The answer is you just got to de-risk and get your money to the side. You got to do that in a market like this. When there's a big rip to the upside, people are going to sell off, and they're going to get their money out. And I'm probably going to do the same thing, because I would rather have all my money and then spot momentum and push huge size, 10, 20,000 shares of something, and try to catch 50 cents, 75 cents, $1, $2, whatever, on something, and get out, just day trade it, honestly, think to yourself, where does the stress come from? It comes from holding in a market like this. The stress doesn't come to me for, entering and exiting correctly day trading. No, it comes to me and even if you take a loss day trading, it's a small loss, because you're day trading. You're everything is tactical. You're set. You got your stops a certain way, but if you're just like, hey, bullish momentum, and everything's looking good on the hourly and the daily, and then it's always catalyst and news driven that just it messes with the charts, then. And you have all the institutions, they want to pull money out because they don't like uncertainty, and they don't know about the runoff on the balance sheet. And, hey, we're actually going to have to do 4 50-point basis hikes, and, all this different stuff. And, hey, we have a wheat crisis, and we have a soybean and corn crisis, and we got a food crisis, and we got gas crisis. I mean, there's a lot of problems, right? So, and this Russia-Ukraine thing, it's not ending at all. In fact, Putin said, he's not accepting their terms, the peace agreement. And in fact, he's moving forward with the invasion, and he let it be known publicly. So that markets won't like that. We're just coming into a real troubled time. And like I said, I'm surprised that the market is being as resilient as it is, because if you look through history and you look at all the times that markets broke, 68 and 72 and 81 and obviously 07, 29, and there's been a lot of, even in 18, 07, 08 was a problem. I mean, if you look at every single one of them and why they broke, there's pretty significant catalysts. And if you just take those catalysts and you put it next to these ones, okay, so let's just take a couple. So in 68, you had Vietnam, okay, and you had high inflation, and you also had a hawkish Fed that was raising rates fast, like we have now. Crashed the market, okay, straight up crashed the market. 72, what happened? Okay, we had the Nixon Watergate scandal, and we had an oil embargo from OPEC. Crashed the market. Okay, in 08 we had default credit swaps, and we had a lot of subprime adjustable loans snuck in that A paper rated benchmark there. It was being hustled all around Wall Street, and you got to build a house on concrete. You need a strong foundation, and if you're putting a little bit of soft sand, and you're not doing it right, and your concrete cracks and folds, and you build it on water, eventually you're going to drown. So unfortunately, those guys took everybody down in the country. And, it goes on and on. I mean, you can go back to the algorithmic situation. You can go back to the Cuban Missile Crisis and Bay of Pigs. And you can go back to when John F. Kennedy, came at the steel companies and his brother came after the stock market. You can look at all these different crashes, right? And if you think about, each one of them had about two major things that crashed the market. We have pandemic, multiple geopolitical situations, including a war, tensions with other countries. We have high inflation, hawkish Fed. We have food crisis. We have supply chain shortages, which is causing massive industry turmoil across multiple industries. And so if you think about all those major crashes, they had two catalysts, and here we are at this one, and we have like 6 of them. I mean, you can't blame me for saying I feel like the stock market's quite resilient, and I feel like maybe we need to be a little defensive right now. I'm trying to probably take these rallies if I can get in them, and try to get as much of my cash to the side, and then I would feel much happier actually doing very large size day trading, because I know how to do it. I don't recommend you do that if you don't, but for me, I'm comfortable with it because I can execute at the right price. I can actually execute getting out well. My brokerage is really good about that, and I know how to read the charts really well. On level 2. So yeah, I mean, I would, instead of just holding and having diversification and institutional support and all these great things that I like. I mean, it's hard if you buy something with institutional support and then the institutions are selling it off and you don't know for a month. Right? You got to look out for yourself. Your money is your money. You need your dough. If you have your dough, you can always make money, even if you've got to not trade for a month or two. Like, yes, I'm not going to sell a lot of stuff that isn't, I'm not going to sell like some of my cryptos and stuff. I'm still have faith in all that. But I tell you what, if this ends up just being a freaking lower high like that, I mean, you got to be non-emotional. You got to get out. No matter how much you love Bitcoin. Otherwise, you're holding the bag. So, I mean, if this ends up being something like that, again, we need to break out, and get up the steps. But I'll tell you what, if this ends up being a lower high and that's a new primary trend. Right now, this is the primary trend. Okay, this yellow line going up. Okay, let's get rid of these because they're not necessary at all. All right, so this is the primary trend. You can see Bitcoin. It went way up, it did its thing, found different supports, resistances, whatever, touch. It's on its way. But if this ends up being a lower high and it breaks this primary trend like it did on the Dow and the NASDAQ, and then this sucker ends up being longer and changing direction. So instead of going up, now we're going down for a while until it changes directions. It won't be forever. Well, we got to watch that. And how would it do that? Well, it would have to break this number right here, this 37,277, right in that range, okay? But if it breaks to the upside and this starts making smaller purple candles and finally blue ones and then busts out through all these different levels, well, we're off to the races. And I think that we are going to be at all-time high by September 17th. So we just need to let it do its thing. We need to wait it out, and we just need to kind of see what it is going to do. Because typically when you get this blue ribbon with a high probability, it's going to keep going. And I know that they love to shake people out. They love to shake people out. And that's why I use the blue ribbon, because the blue ribbon prevents me from getting shaken out. It actually it lets me know that there's more money that's come in, even though it looks dirty on the chart. There's more money that's come in and is creating a trend. Now, if you just want to see what that trend looks like, well, essentially, trend right now looks like this. Okay, it's not very long, but I have seen thousands of charts, guys. I'm not kidding. Thousands of charts where it's done this, and then it's gotten really small, and then it's fanned out. See, here's one right here, real small, and then boom, fanned out. It's par for the course, especially with Bitcoin, that there's these shakeouts. So let's go back and see what's going on with the 1 minute. We're still running. We're still going. We're at 40,107. I mean, it's progress. It's not as lovely as it was a week ago, but let's be honest. The week before that, it was at 40,000. So we backtracked 2 weeks. It might not be the end of the world. We just got to take it day by day, play by play. Okay, that's what we got to do. We got to take it day by day and play by play. Look, this is the minutes. Imagine the daily. Okay, remember I was just explaining right here how I've seen this happen, and then it'll rally up and it'll spread out like it did over here. Well, it's the same thing on the minutes. Look, rallies up, and look at all these come down. Imagine that's the daily, and then it starts to take off, and the blue ribbon, the trend goes longer. Okay. We got to trust the trend until we can't trust the trend no more. That's why entries are so important. Entries are critical as a trend trader. That's why I teach the 4 market phases and coming out of phase 4 into phase 1 in the accumulation phase. And then I use this as a guardrail or to help guide you guys and color code it. I don't need it myself, but you know, it looks cool and I think it helps you guys. It helps me be able to explain away an easier way for you guys. But yeah, I mean, look at this. You know, you probably, if you're in Bitcoin, like all of us, this comes down and you're freaking out. But if you got this trend here, you're staying in. You're trusting it, right? So the main thing is you're bouncing off this major level, which is the neckline. It's a major level. You fall below this 1 yard line right here. It's done data. Okay, it's dirty business. It's dirty bird. It's not good. All right, but look, little bounce. We'll see what happens. Now, when you hear technical traders talk about, you know, you want to buy and off a bout and put a stop here, this is the moment where you would buy. You would actually buy off this bounce and you put your stop right below it. And if it comes down, you get stopped at a low risk. If you don't get stopped and it continues to go up, well, here's where I was just showing you. It's low risk, high reward. Okay? So you're in the stock market, you're in the crypto market. You got to understand, you're going to take some risk. But those who risk in business, in life, you know, put your money where your mouth is. Scared money don't make money. You know, that kind of thing. Like, those can be the big winners. You just want to do it technically, and you want to do it on conviction plays, like Bitcoin for me is a conviction play. I have the ribbon that I trust, and we're bouncing off a major level of support. I mean, 5 years up the road, you're going to be happy if you bought it at 40 and you let it rip. Because even if it comes down here, bounces, and this is the lowest it goes, and it goes way up, and it makes another one like this, and then it comes down here, well, guess what you just did? Let me just show you something. Let's just, for simple trend lines, let's say you come up here, okay? And then let's say this thing, you know, let's just say it comes down here, okay? And then later up the road, you know, a few years, whatever, this thing goes further. Well, what's happening? You're making higher highs, and you're making higher lows. You're still going up in this overall trend, okay? Oops. Imagine this little, we'll make it yellow so it makes more sense. So, okay, but it's following the primary trend. As long as it's doing that, you can follow the primary trend all the way out 10, 15, 20 years. In fact, there's the stock to flow model. Basically, the stock to flow model, it's following a primary trend, guys. So that's why I talk about how important it is that we do not break this primary trend. We already fell below the 200, and if we fall below this neckline, and then we only have this little box to go, and we break that primary, well, you know, like I was showing you, you know, this ends up being, you know, lower highs, and you end up having a new primary trend. And now we got to go through all this process to like break out of patterns and minor trend reversals and all this different stuff. So we got to go day by day. We got to go play by play. But I'm pretty sure this thing, I mean, this is kind of, look at how much work it's done just to follow the darn primary trend. I really don't think the powers that be are going to let it fall through that primary trend. Bitcoin has too much going for it. It's too powerful of an asset, and it's loved by too many to do that. It would break my heart. It would break my heart. Okay, and you know, I don't want that to happen. So, but you know, you gotta be realist. I just like the fact that yeah, look, I can already tell. I can already tell. Look at this. Hold on, if I can fix that. See that candle right there? That candle is smaller. This is momentum candles, big momentum to the downside. That one looked okay, but it got knocked out. But see what I see? See these two wicks? They fell back into the box below the neckline. But look at the length of this wick. Boom! That's bulls, baby. That's the bulls fighting back, holding the line, okay? Yeah, people are getting slaughtered. People are getting shot. The medic tet is out. We need to fly in some blood. But you know what? We're still throwing grenades. We're still loading the Gatling gun, okay, over here on the line. They tried again. I don't know why. They're a bunch of fuckers. Is what they are. But boom, we push up. And now look, you finally get a momentum candle that's light. It's smaller. And all three above the line. That means the bulls are holding the line. So this is about that time where you buy the bounce. And you definitely put a stop, and I would put a stop below these two wicks. I would put them a little bit lower, okay? Because there's a chance they could wick you out and then run, and then you just get caught in the trap. Dangerous under the 200, but you know, Bitcoin's a risky business, guys. Like we gotta. I mean, dude, it's tough. You're under the 200, that's bad. You got a blue ribbon, that's good. Your momentum's losing, that's better. You're holding the line. That's great. Technically, I mean, this is crossing. This is wanting to turn. I mean, it's not perfect. It seems like you're still like a day away from a decision. But when I dig deep into this, like I just did, and I'm looking at the fight that's going on, the bulls are holding the line. It's on the line, which makes us all nervous, but we're holding the line. And that's positive. And because like the NASDAQ and Bitcoin are so attached right now, when the stock market comes down, Bitcoin goes down. And because the stock market's not happy, it's affecting crypto too. And, you know, crypto wants to rally. I can tell because as soon as the stock market closes, crypto starts to rally. You guys notice that for like the last 10, 15 days? When the stock market closes, crypto likes to get a bounce. That's because it's attached to the stock market during the day and it follows it. But when the stock market closes, it like flourishes like a little flower and it wants to get up to the sun, you know? And that's why I think that Bitcoin wants to rally. That's one of the reasons, not the only reason, but it's one of the reasons I think that Bitcoin wants to rally. And I just want to, you know, just put it out there that, you know, we got to be positive and we got to fight this fight. You know, this is the fight. This is the fight. It's on Bitcoin. You want your Cardano and your Shiba and you want your Zcash and you want your Ray and your Luna and you want all that stuff to work out. Well, this is where it starts. We got to take care of our baby Bitcoin. Okay, that all the alts will come with, but the alts are going to go if Bitcoin goes up, the alts will go up. If Bitcoin goes down, the alts will come down. Most of them. So, you know, the fight is on Bitcoin. I'm not giving up on it. I actually like what I'm seeing with slowing momentum. We held the line, and this is actually a good technical level to buy a bounce. And we might be a little bit off on the bounce. Okay, it's bouncing. That's a bounce. That's what that is. That's a bounce, guys. It's not perfect, but it's pretty good. And we're still holding a blue ribbon. It's getting smaller, but it also came down here. And this actually tightened up like this. It tightened up here too. But then it came up and it loosened it up. And if we just get some blue candles right now, this thing will start to spread out and the trend will go further. if you learn to trust the trend, okay, especially on smaller time frames, and you enter correctly and exit correctly with those conditions on the smaller time frames within the trend, especially off of support bounces and good technical levels, the odds are in your favor to always pull down gains. So look, I'm gonna leave it there. I hope you guys enjoyed the video. I just winged it, to be honest, and I just been really like into Bitcoin and crypto lately, and I've just been irritated with the stock market, irritated with the news, just irritated with all that, and I just really feel that crypto wants to rally hard. Like, it's either being held down on purpose or it's just attached at the hip to the damn stock market. So look, I'm going to leave it there. My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse.